All right. Good morning, everybody. Good morning, all you magnificent melon heads. Happy Thursday, everybody. Today's November 14th, 2024. And the top story this morning, much like yesterday, it is inflation. It just won't die, just won't go away. You'd never guess if you check out the financial press, if you listen to CNBC, or if you listen to all these muckety mucks in the press corps when Jerome Powell's at the podium and they're all fawning over him and asking him for, oh, could you please give us something we can put in big bold letters that's bad about Mr. Orange? No, they've all declared victory over inflation. Have you looked at the inflation numbers? Has anybody seen the Fed's arbitrary 2% target? Is that around here anywhere? Is it hiding under the desk? Because we haven't gotten anywhere near it. Still, producer price index just came out a few minutes ago, and it's up 2.4% year over year headline. That is up from 2.3% that was expected, and way up from the 1.9% that we got last month. So we've got a 0.5% increase in producer price inflation on the headline number, which includes food and energy. On a month-over-month basis, it was 0.2%. That's also up from 0.1%. Now, core PPI, and again, this is producer price inflation. We had CPI yesterday. PPI measures inflation further upstream. The core PPI came in at 3.1% year over year. That's up from the 3% that was expected, and that is up sharply from the 2.8% last month. So core PPI still more than 50% above the Fed's arbitrary 2% target. So what's going on? I thought inflation was dead. Guys, we're sitting here. We're lowering rates. Stocks, new all-time highs on seemingly a daily basis. Bitcoin, good God, 90,000, 91,000. I blinked. Don't ask me. By the time I get to the Bitcoin chart, it might be 95. So I don't know. We got as high as 93,400 yesterday. And the Fed is easing. Asset prices at all-time highs. Inflation still well above their arbitrary 2% target, and they're easing. Is the Fed making a huge mistake here? I don't know. But guys, the idea that inflation is this like vanquished beast and we're all like, whew, that's over. It's like that moment in the horror movie where like, okay, the beast is supposedly slain, but there's no celebratory music going on in the background and the main characters are all cheering. And you just know it's not dead yet. No, don't turn your back on it. What are you doing? It's right behind you, you idiot. It's going to, you know how this ends, right? I feel like we're kind of at that phase with inflation here. Anyways, higher than expected any way you look at it. Now, meanwhile, like we said, Bitcoin rallying like crazy. That makes sense if you're expecting another wave of inflation. Gold and silver, meanwhile, are getting bludgeoned pretty much for like the last 2 weeks here. Now, they're still at pretty high levels, right? Gold went as high as almost 2,800. Now we're back down under 26. Silver threatening to break below $30 an ounce here. I think the market is giving a buying opportunity for precious metals here because if we are about to see a second wave of inflation, and I'm convinced we're going to see a second wave of inflation because sooner or later we're going to have a liquidity event. And what is the Fed going to do? They're going to zerp and burr like they do every stinking time. So the market's giving you a good look at gold and silver here. I think gold and silver are having a really hard time with this seriously stronger dollar. The dollar has been strengthening like crazy. It's over 106 today. It was pushing 107 at one point. That's going to be a headwind for gold and silver. Again, in my opinion, that's a buying opportunity for metals. Now, also going on this morning, we got Disney earnings came out. Disney actually came out with a pretty good quarter. Nice beat. They were helped by things like the Deadpool and Wolverine movie, the highest grossing rated R movie in history. On top of that, Inside Out 2, the highest grossing animated movie in history. So that helped their movie segment. They also added 4.4 million global subscribers to their various streaming platforms. Parks was a little bit of a sore spot for Disney. International parks income was down 32% versus a year ago. They're chalking that up to the Olympics. They're saying the Paris Olympics stole some of the thunder from Disney Paris. Okay, maybe that's true, or maybe people just can't afford to go to Disney World anymore. But either way, Disney stock having a pretty good morning. Keep your eye on Supermicro, guys. Countdown, 2 days to Supermicro's deadline. Now, they came out yesterday, and they announced that they're not going to be able to file their 10Q on time. And I'm sitting here thinking, okay, this is like just a story. This isn't new. We knew. Oh, wait, no, that's the 10Q that Supermicro said yesterday they weren't going to be able to file on time. It's the 10K that was due months ago that they haven't been able to file, and then their auditor quit. So now they need to find a new auditor who's going to rubber stamp their 10K before they can get that out. So the story yesterday about the 10Q not going to be filed on time for this most recent quarter, that's almost like an afterthought. You're already months overdue on your annual report. You're not going to make your quarterly anyway. The deadline to be delisted if you don't get that 10K filed is in 2 days on Saturday. Now, here's the question is, will they be granted an extension by the NASDAQ? I cannot imagine a scenario where they would. I mean, when Ernst & Young quit at Supermicro, they used some of the most damning language I've ever seen an auditor use. Basically say you can't trust a word these a-holes are saying. We're not staking our reputation on their financial statements. They've got a history of fraud. Now, the NASDAQ could theoretically give Supermicro a stay of execution. They could grant them an extension. If Supermicro comes up with a plan to return to compliance and NASDAQ likes it, they could say, okay, we'll give you 6 more months, or we'll give you another 180 days, or some arbitrary number like that. I cannot for the life of me imagine why the NASDAQ would do that, but they could. We may hear about that this weekend, or we may hear that Supermicro is getting delisted from the NASDAQ again, which would trigger a massive wave of ETFs dumping the stock because their rules no longer allow them to hold it. And that thing is heading, maybe it's not going to zero, but it's going to get really close to it. That stock has been bleeding out the last couple of days, losing a couple of percent a day. It was down another 6% the last I looked ahead of the opening bell this morning. Another story we got going on this morning, Advance Auto Parts. They reported earnings, net sales down 3.2%, comparable store sales down 1.7%. Not terrible numbers, but the big deal there, they are closing 700 stores. The language was they're shutting down 530 some odd stores, and then they are exiting another 200 locations. And by exiting another 200 locations, maybe those stores might stay open as like Bob's Discount Auto instead of Advanced Auto Parts anymore. But as far as Advanced Auto is concerned, 700 stores going away. Pay attention, guys. That's a lot of jobs that are going up in smoke there again. The auto market, again, continuing to have problems. Now, people don't really work on their own cars anymore, so I'm not too surprised. But I also think what's going on there is there are just fewer vehicles on the road. New car sales have not kept pace pretty much since the pandemic because people can't afford them. The age of the average car on the road has risen substantially since 2019. So you would think there would be more auto parts selling as people are maintaining these older clunkers, but that's not happening because as cars die, people are not replacing them. There are fewer cars on the road now than there were a few years ago. And so you don't need auto parts stores to keep those things running. We also got a story from Southwest Airlines. Came out this morning. They are offering buyouts to employees at 18 airports and corporate headquarters. And when they offer voluntary separation packages, that usually means layoffs are not far behind. More trouble in the airline space. And speaking of layoffs, we got some jobless claims data. It was actually a little bit better than last week. Initial claims came in 217,000. That's down from 221,000 last week. So a slight downtick in initial jobless claims. Continuing claims were also down 1,873,000. That's down from 1,892,000. So a decline of about 19K for continuing jobless claims, a modest improvement in the labor market this morning. We got a lot to talk about. Let's shrink my big melon of a head and see what's going on in the market. And this is when I usually ask you guys to hit that like button, should you feel so inclined. And if you're new here, hit the subscribe button and come and have your coffee with the melon heads. As we go through markets every morning, the S&P 500 is pretty much flat here, up 1.9 points, 0.03% higher. It was a little bit higher. Market did not like the PPI data. We had a little bit of a sell-off. Emphasis a little bit, guys. It dropped by about 10 points when that happened. Still essentially unchanged here. The U.S. dollar, not the U.S. dollar, the Dow, meanwhile, is up 100 points here, about 0.25%. Dow's looking all right, and the NASDAQ is in the red here, down about 10, 11 points, or about 0.05%. So got a little bit of a mixed bag in stocks this morning. The Dow's looking okay, S&P and the NASDAQ not so much. Now look at the U.S. dollar here, up again, another 29 basis points. Guys, the dollar is surging here versus other global currencies, 106.77. For the Dixie, up another 28 basis points here. It's kind of odd because we're all talking about inflation coming back. We're watching Bitcoin rip higher. Gold, okay, gold has been selling off for the last 2 weeks, but take that away, gold has been ripping for months. And yet we're talking about a stronger dollar. This is a weakening of other global currencies. And we got some talk out of Japan this morning that I think is worth keeping your eye on. This one was in Reuters, who just paywalled everything, so I got to go to MSN to get it. BOJ should raise rates to 1% to reverse the weak yen, says opposition lawmaker. Now, this is kind of a political talking point, but they're talking about a big hike in BOJ's rates. Right now, the BOJ is at just a quarter of a point. And all through last year, through this big elaborate tightening cycle, what do we get? 10 and then 15 basis points of hikes, like combined 25 basis points of hikes from the Bank of Japan. And that was enough to have global stock markets freak out in August. And now they're talking about 75 basis points. Now, this is not the party that's in power that's talking here, but you should still pay attention to this. The Bank of Japan should raise interest rates to at least 1% to roll back an abnormally huge stimulus that is causing unwelcome falls in the yen, said Takeshi Shina, the shadow finance minister of the country's largest opposition party. Note to self, how do I get an awesome title like shadow finance minister? My God, that sounds so awesome. I want to be Takeshi Shina. I want to be the shadow finance minister. The central bank should normalize monetary policy steadily and clarify its intention to do so at a short-term policy rate currently at 0.25% is well below levels deemed neutral to the economy. That's what Shina told Reuters in an interview on Thursday. The BOJ's mandate is to achieve price stability, but that isn't being met as the huge U.S.-Japan interest rate gap is causing yen falls that push up the cost of living, said Shina, known as a vocal critic of the ultra-easy policy. Now, there was a really good couple of points here that they're making. Shina belongs to the Constitutional Democratic Party of Japan. That's the country's largest opposition party. It's seen its clout increase after a major victory in the general election held on October 27th, though its seats remain well short of a majority. So this Shina person, not in charge, but gaining in popularity, gaining in clout here. The Constitutional Democratic Party of Japan has criticized former BOJ Governor Kuroda's radical monetary stimulus deployed in 2013 as hurting financial institutions' profits and distorting market function. Shina said the BOJ should replace its 2% inflation target with a looser goal that allows the central bank to shift policy more flexibly as long as price growth stays positive. The BOJ and the government must then work together to achieve positive real wage growth, he added. And that, I heard the Happy Hawaiian, one of my favorite accounts on X, was talking about this very subject a couple of weeks ago. Said we should replace the Fed's stupid dual mandate of price stability and maximum employment with a single mandate to achieve positive real wage growth. Because positive real wages that's the sweet spot. That's where you want to be. That's when life is getting better for the average person. Of course, that's not what the Fed or the BOJ's goal is. Their unwritten goal is see how much money we can rob from the plebs via inflation and then hand over to the families and banking interests that control us. But the actual mandate should be positive real wage growth. Anyways, the whole point of talking about this article is there is a growing chorus in Japan to normalize monetary policy. This is now a call for a big hike in monetary, a big hike in interest rates. And the reason, guys, is look at the yen here, 155.8 yen to the dollar. The Japanese yen has weakened substantially since the Fed started cutting rates here in the U.S. The Japanese yen has gone from about, what were we on, September 16th, right before the Fed hiked on September 18th. We were at 139.5. Now we're at 155. This is the currency of the third biggest economy in the world. You need to pay attention to this, and we're getting up to that level. We talked about this yesterday, where the central bank may intervene in Forex markets. So that whole August freakout that led to the bloodbath on August 5th, we could see a rerun of that eventually. Probably not anytime soon, but it could happen. All right, let's look at the bond market here. 30-year Treasury, 4.611. That's down about 2.5 points. The 10-year, 4.449. That's down a half a point. The 2-year yield, 4.275, down almost 1 point. And the 1 month is down a fraction of a point here at 4.579. Not a lot of movement in bonds this morning. We do have a decent amount of red in the commodity space. Metals are selling off once again. We've got spot gold is under 2,600 here. $2,560 an ounce for spot gold. It's off another $12.75 or 0.5% here. Spot silver, meanwhile, $30.24. It actually dipped under $30 briefly this morning here. It's down another 7 cents or about 0.25%. Guys, let's not overthink the move in gold and silver. We got a stronger dollar and we got higher interest rates, and that is not good for precious metals. But considering what I think inflation is doing and is about to do or will eventually do, I do think the market is giving you a buying opportunity even at these high levels here. Copper, meanwhile, down 0.15%. Platinum down 0.25%. Palladium down 1.5%. A little bit of life in the oil market, though. The one commodity that seems to be up here, WTI crude futures for December at $69.22 a barrel. That's up about 80 cents or 1.2% higher. Taking a look at the silver chart here, guys. Look, it's been a rough couple of weeks. It looks like the sell-off in silver, it started on the 22nd of October. Now, a lot of the commentary on this silver sell-off has been centered around the election, but guys, the election didn't happen until the 5th, so that was like right around here. This sell-off was already midstream here. We were about halfway through it when Election Day happened, so this is not just a Trump sell-off in silver going on here, although the Trump re-election certainly contributed to that. Generally, we just got a risk-on sentiment taking over markets here. That's not good for gold and silver. We've got a stronger dollar and we've got higher rates. Now, one thing that are not being affected by that stronger dollar or higher rates is Bitcoin. Good God, $91,000 for Bitcoin here. And that's off its highs. I mean, guys, what was it? 3 days ago, we were talking about breaking 80,000. We did not spend much time in the 80s for Bitcoin. And that's disappointing because the 80s were awesome. We had Bon Jovi and Billy Idol and nope, right through it into the 90s. Boy bands. All right, there we go. Right now, $91,066 is priced on Coinbase, up $570, about 0.2% higher. We went as high yesterday as 93,495. Guys, this thing is going straight to 100,000. The question is, what happens at 100,000? Do we stay there? I think we probably stall there, sell off a couple of grand, and my guess is we spend a couple of days, maybe even a couple of weeks at that level. If we break right through or blow right through that $100,000 level, I don't know where it goes from there. We're in uncharted territory. We're in the middle of a FOMO rally, so let's not try to guess where a FOMO rally might start or stop. But I can tell you, we've been here before. We know how this ends. Sooner or later, somebody will take this FOMO and they'll do some kind of big fraud a la FTX or BitConnect or OneCoin or the Mt. Gox hack. You'll have some big crypto fraud that will take the whole market down, and then the next halving cycle after crypto winter sets in again, as it's done several times. Rinse, repeat. That's why all I ever do is I take little nibbles in Bitcoin. I buy a little bit on the regular every week, and I don't try to trade it because overall I think the tide is going higher over time. Now, let's talk about PPI. The big story today, inflation. Producer prices in the U.S. increased 2.4% in October. That is higher than what was the market expecting? 2.3%, and well higher than the 1.9% that we saw in September. So an acceleration in headline PPI. This is producer price inflation. On a month-over-month basis, we had 0.2%, kind of within band where we've been on the monthly rate of inflation here, up from the flat number that we had last month. Now, here's the one that's kind of worrying me a little bit here, guys. This is core PPI. Now, we used to talk about core inflation back when food and energy and after the Russian invasion of Ukraine, when oil prices were spiking and food prices were spiking. The Fed was always like, oh, don't worry, core inflation looks much better. It's all because of Putin. Don't worry about that. Well, now that core inflation is significantly higher than headline inflation, you don't hear the Fed talk about core very often, or super core inflation, or core non-housing services inflation. You don't hear about those specific little bright spots anymore because they're not so bright. Core inflation has now risen 3 consecutive months. We hit a low of 2.5% in July, and we have not looked back. We have gone higher every month since, now 3.1%. So if you take away declines in food and energy prices, guys, prices are still rising way faster than the Fed's arbitrary 2% target. Inflation is not dead. That's the takeaway here. By the way, PPI month over month for core PPI was 0.3%. Again, that was basically in line with expectations, but higher than the 0.2% we got last month. Now, EJ Antoni has a pretty good one here. He says, history may not repeat, but it certainly rhymes. And then he says, Trump has been handed a ticking time bomb, talking about inflation here. Now, what he's showing us on this chart, if you can see it, they're comparing the 1970s inflation to the inflation that we're in now. And I've often said this, guys, inflation in the 70s and in the early 80s, it had three distinct waves. But before we get into this chart, I have to say, this is important here, guys, because I see this every now and then, and you always question these charts because we've got a flag on the play here. Personal foul, chart crime, Mr. Antoni, 5-yard penalty, repeat first down. Look, this isn't the worst chart crime I've ever seen here, but notice the y-axis. All right, I agree with what EJ Antoni is saying, and I agree with the premise of it, but he's played with the axis a lot to make this chart look better than it would otherwise. All right, on the current spate of inflation, he's got the y-axis going from -1 up to 12, and then on the 70s inflation, he's got it going from 2 up to 15. So he's shifting the charts so they line up better and they look about the same. It's a little bit of a chart crime. I don't like when they mess with the axes. Now, that being said, I kind of, had a laugh at EJ's expense there. I agree 100% with the premise of his tweet, though. Inflation will be coming back. Look, stocks are making all-time highs on a freaking daily basis, and the Fed is easing. That is insane what they're doing right now. And if we're going to pretend to be surprised when inflation comes back, then we might as well believe them the next time they tell us it's transitory, because we know it's coming back. And that's why I think this is probably an opportunity. This discount we're getting in gold and silver, I think that's a buying opportunity. And it's why I think it makes sense that Bitcoin is ripping higher here. We've been here before. Also going on this morning, Disney narrowly beats estimates as streaming boosts the entertainment segment. This article is kind of all over the place, guys, but it was a good quarter for Disney. Let me just skim through the highlights here. They reported fiscal fourth quarter earnings Thursday, narrowly beating estimates as streaming growth helped propel its entertainment segment. Their net income increased to $460 million or 25 cents a share. That's up from $264 million in the same period a year ago. So nice growth there in their net income. Revenue for the entertainment segment, which includes TV networks, direct-to-consumer streaming, and films, increased 14% year over year. That's a good number there. Disney's Pixar's Inside Out 2 became the highest grossing animated movie of all time this summer, surpassing Frozen 2 at the box office. Meanwhile, Deadpool and Wolverine became the highest grossing R-rated film of all time, surpassing The Joker. So those films added $316 million in profit. That was really good. The sports segment wasn't so good there. That revenue was flat. ESPN's profit fell 6%. Nothing new there, guys. The cord cutting continues to be a drag on ESPN. Now, their streaming business did really good here. Disney Plus core subscribers, which excludes Disney, or it excludes their Indian numbers, that grew by 4.4 million there. So they added a lot of subscribers to Disney Plus and Hulu. So that's really good numbers there. What else we had? The parks income was interesting, though. Experiences segment, which includes Disney's theme parks, that was up 1% in revenue. Domestic parks rose 5%, helped by higher guest spending in parks. Now, the one blight on this otherwise really good report from Disney was their international parks fell 32% due to a decline in attendance and in guest spending, as well as increased costs. So they're kind of chalking that up later on in some of the other articles. They're blaming the Olympics in Paris for that. That, okay, nobody went to, Disney Paris because everybody was watching the Olympics. Maybe that explains it, but a 32% decline in attendance, that's a big drop. That's worth keeping an eye on. I don't think it's an emergency just yet. And again, all the other good news for Disney, certainly more than enough to offset that, but that's worth keeping an eye on. Disney stock is ripping this morning, up 9.2% here, $112.16. It's that growth in the streaming segment. That is what has investors excited this morning. Supermicro stock falls further as it faces new hurdle with filing deadlines. And it's almost like, Supermicro is not going to make their filing deadline. Nobody cares because the other deadline that they missed months ago is coming up on its double secret second deadline. Stock's going to get delisted, guys. This is dead money. Run. Do not walk for the exits. That's all I can tell you. Supermicro faces a new challenge as it tries to remain compliant with listing requirements. The server maker disclosed on Wednesday that it won't be able to file its September 10Q without unreasonable effort or expense. Yes, it's very hard and very expensive to tell the truth when you're a fraudulent company. In a way that's almost beside the point, as Supermicro, also delinquent with its 10K annual report for the past fiscal year, the company has a looming November 16th deadline, that's Saturday, to submit a plan for how it intends to get back in compliance with that requirement, and it needs NASDAQ approval for the plan. I mean, what's your plan? Don't go to jail? Is that your plan? Without an auditor, there's no way they're going to get back into compliance. There's no auditor worth their salt that's ever going to sign off on their books. Look, every day, every post, every time I talk about Supermicro, there's always some guy who responds with buy the dip or YOLO into calls or some AI bro that says something about data centers. It doesn't matter. These guys are crooks. These guys are frauds. They have done fraud before. They're doing it again. This would be their second delisting in 6 years. If you're still investing in this company, maybe investing is not for you. I hear pickleball is nice. Just throwing that one out there. Supermicro down another 12% this morning, $17.89. Guys, this was $121 stock 6 months ago. It's now $17.92. Advanced Auto Parts to close more than 500 stores and exit 2 other locations. More trouble in the auto industry. This time it's parts. Shares of Advanced Auto Parts were headed for a sell-off Thursday after the maker of auto parts for both professional and do-it-yourself customers reported a third quarter loss and announced a plan to close more than 500 stores and 4 distribution centers and exit more locations. The plan includes closing 523 Advanced corporate stores, exiting 204 independent locations, and closing 4 distribution centers. That's a lot of jobs that are going away. The company estimates total costs of $350 million to $750 million for the closures, including severance and employee benefit costs and lease terminations. That's trouble in the auto space, guys. We've been talking about it a lot. Now it's into the auto parts business. Now, that being said, hey, look, the stock's doing all right here. It was down 5% a couple of minutes ago. Now it's actually up 6.5%. I guess those are cash burning stores that they're closing. Stock at $43.60. I'm still not getting anywhere near this one with a 10-foot pole because I don't think the situation in auto is done yet, guys. Also, pay close attention to auto finance. We had a credit union in Florida failed last week. They announced it on Friday, and I went and I looked into that credit union. I was talking about this on DNN over the weekend. Their main product had been auto loans for the last 3 years. Auto space, there is something wicked this way cometh in autos. Southwest Air to offer buyouts at 18 airports and corporate headquarters, and usually the voluntary separation packages come right before the layoffs. Southwest Airlines will offer voluntary departure packages or extended leaves to airport workers in 18 cities, including Los Angeles and Atlanta, as aircraft delivery delays force the carrier to trim its flying plans. The offer will be extended to airport ground workers such as customer service, ramp and operations agents, as well as cargo employees and supervisors in some cases. The company said in a statement on Monday, employees in Southwest headquarters that support airport workers will also be given the buyout option. Southwest didn't immediately say how many people will receive the offers, which will be shared this week. Those who accept will leave the airline at the end of the year. The carrier previously said it plans to end this year with 2,000 fewer workers than at the end of 2023. So no word on layoffs yet, just voluntary separations that usually precedes the layoffs. And speaking of layoffs, we got initial jobless claims. It's actually ticked down again this week, 217,000 for the week ending November 9th. That's down from 221,000. So we've got several consecutive weeks here. We had a big spike at the beginning of October in initial jobless claims to 260,000. Ever since then, we've been trending down, back down to 217,000. So the layoffs, there's a lot of anecdotes about layoffs, but the number of them resulting in initial jobless claims has yet to really dramatically increase. That's encouraging here. Now, the downside to that, continuing jobless claims, although they were down this week, they were down from a pretty high level. Continuing claims in the U.S., which are seen as a proxy for the number of people receiving unemployment benefits, decreased to 1,873,000 for the week ending November 2nd. That's compared with 1,892,000 in the previous week. So down again, but again, we're down from a pretty high level. That number that we had at the end of October was the highest we've seen all year. We're down from that level, but still elevated here. People who do lose their jobs are having a harder time finding a new one. And that's in line with what we've seen in things like JOLTS. The number of job openings in the U.S. has been in decline for several years now. And I just want to say thank you very much to Mr. Steve Woitis. Thank you, Steve, for the super chat, sir, and supporting the channel. He says, copper testing a 2-month low and below both the 50 and the 200-day moving averages. Thoughts? Well, my first thought is I better bring up that copper chart that you're talking about so that I know what I'm talking about as I look at this. So let's go over to Bitcoin here. Let's see if we can find Dr. Copper in the list here. Where are you, Copper? There you are. Copper. Let's do copper futures. This is the thing with TradingView. When you type in copper, you get 400 results. Here we go. There it is. All right. Now we're in daily candles. We got to put our indicators on. Let's put on a moving average here and let's see if we can find it. I think we talked about the 50-day moving average there. Sorry, I did not have this one queued up there, Steve, but okay, 50-day, I see. Breakdown below the 50. Yikes, that's not so good looking there. Let's see, this is going back to the beginning of the year. We're not quite at the lows that we saw in August. Interesting thing about copper futures, we saw the low on August 7th, 2 days after that bloodbath in markets with the yen carry trade. That's kind of interesting. And now we're heading back to that level, even though the yen story is, for the moment, behind us. Look, copper is a very good barometer of the overall economy worldwide. Now, I think copper is being disproportionately affected by what's going on in China. If China's not building cities that nobody needs anymore, then they're not putting in the pipe and the wiring that's needed there. So I view copper, at least at the moment, there's obviously other inputs there, but at the moment, I view copper as the prospects for recovery in the Chinese developer and construction market. And as you can see here, not so good. Copper really started selling off. Interesting. It really sold off on the election. So the copper market is telling us the Chinese housing market is probably not going to recover now that Donald Trump is going to be president. Okay, I can see that. That makes sense. So again, I'm just kind of like freewheeling this one here, guys. We're doing this on the fly. Donald Trump is probably going to put a ton of tariffs on Chinese imports into the United States. So if China's exports are going to take a hit from tariffs, then China certainly will have less, we'll say, ammunition available to them to deal with the collapse in their property segment. And so I guess it makes sense that the decline in copper accelerated with the election of Trump if you're viewing copper as a litmus test for the health of the Chinese economy, as I do. So that is my 2 cents on what's going on in the copper chart. Thank you, Steve Woitis, for the super chat and for really putting me on the spot with that one today. Appreciate that very much, sir. And thank you, everybody, for having your coffee with the Melon Heads this morning. I appreciate that very much. Thank you so much to my Patreon supporters and magnanimous Melon Heads on YouTube. Looking forward to talking to you guys at 3 p.m. Eastern time today. And maybe a little groggy for that one, but we must press on. So I'll see you guys at 3 p.m. today. Everybody else, have an awesome afternoon. Hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.